All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Investor Select Conference. My name is Robert Blum, Managing Partner of Lytham Partners, and during this webcast, we welcome Precision Optics, ticker symbol POCI, on the NASDAQ, and their Chief Executive Officer, Dr. Joe Forkey. Before I turn it over to Joe to walk us through the slide presentation, I want to remind everyone that if you've not already signed up for a one-on-one meeting and would like to do so, please send me an email, and that's Blum, B-L-U-M, at lythampartners.com. Or you can visit our website, lythampartners.com/virtual. Click on the one-on-one meeting request button, and we'll look to get you taken care of. So, Joe, with that said, the floor is yours. Please begin.
Great. Thanks very much, Robert. And thank you all for joining us today to talk about Precision Optics Corporation. First slide, of course, is the legal one. We'll move through that quickly and talk about our company, Precision Optics Corporation. So Precision Optics Corporation has been in business for over 40 years now. At our core, we are a technology company. We're an optics company. So everything that we do has something to do with optics, either illumination or imaging or data transmission, all sorts of things you can do with optics, of course. But we have a couple of very specific areas within optics that we have developed some proprietary technology and proprietary IP around. And those are the things really that we compete on. And so these particular areas are micro-optics, 3D endoscopes, and digital imaging. We'll talk more about these as we go through the slide deck. The business model that we've put together that we've been working through recently that has been quite successful is one where we recognize that we're a technology company. And so we have to partner with our customers to take our technology and use it in their products. The key point here, though, is that our technology is unique to us, and our technology really enables the next generation products in medical devices and more in defense and aerospace as well. And so we work very closely with our customers. We look to see if there's an alignment between their needs for their end user market and our technology. And if there is, we engage with them, go through a development process. We get paid for the work that we do for the development. We maintain ownership and control of the IP that we continue to develop. And then if everything goes well, we work through the development of that product, and then we roll it into production. And we keep that product in production and continue to manufacture it by POC for our customer for the long term. By moving products through the engineering pipeline, the development pipeline, and into production, we continue to grow the company in a very significant way. We have been engaged in a number of strategic initiatives to drive the growth that we've seen over the last few years and to continue to drive future growth. The first of these is that we have been starting with some acquisitions. So we did our first ever acquisition of Ross Optical a few years ago. We'll talk about that in one of the later slides. We did our second acquisition of a company called Lighthouse Imaging just a little over a year ago. Those have both been very successful, both in terms of augmenting the capabilities of the company, as well as increasing the overall value of the company. We have been focused pretty significantly on growing our sales capability and our sales capacity. This has led to a significant growth in our engineering pipeline and our backlog. We've also invested in our technical resources because at our core, as I've said a couple of times, we're a technical company. So we want to stay up to date and continue to push the envelope and develop next generation technology that other companies don't have. And then finally, we've been investing in and updating our production capacity because as more and more of our programs come out of the engineering pipeline and move into production, we need this production capability to run as smoothly as possible. As I said, our company is over 40 years old now, and we've, like any small company, we have had our ups and downs. We have been involved in many different disciplines over the years. We've been involved in medical devices since the beginning of the company. But what I really want to focus on here is the recent developments that have led to the significant growth that we've seen over the last few years. The first part of this is that we have a number of products that have moved through our engineering pipeline into production. In some sense, we had to prime that pump and get the first couple of customers through the development process. And the first of those customers with this new business model really went into production in 2018, 2019. Our pipeline, which is an indication of the growth going forward into the future, is larger than it has been any time in the recent past. And then, of course, as I already mentioned, we've done a couple of acquisitions. We believe that there are other strategic acquisitions that we could look at in the future. And then finally, all of this is reflected in a critical milestone for us, which is that we listed on NASDAQ just about 2 or 3 months ago. And while listing on NASDAQ is useful from the standpoint of giving us greater visibility in the investment community, making it easier to invest in our company, it really also is an indicator of the successes that we've had that have led us to the point where we have satisfied the criteria that allow us to list on NASDAQ. Sort of the beginning of the story, of course, is what's happening with revenue. And you can see from this slide that our revenue growth has been pretty substantial over the last 4 or 5 years. This has really come in large part from the business model that I just described that we started working on 5, 6, 7 years ago. It's also come from the acquisitions that we've made. And so some of what you see here is organic growth, and some of what you see here is growth due to acquisition. I do want to point out that in 2020 to 2021, I'll remind everyone that this is when we were in the midst of the pandemic. And while our growth slowed during that time period, we were quite pleased to see that our growth still continued to move in a positive direction. 3 of our programs that had moved from the pipeline into production were delayed substantially, and revenues were reduced substantially during the pandemic because, as you all may remember, elective surgeries were severely restricted during that time period. So the fact that we were able to continue our growth, even though it was a slower rate during that time period, was a big success, we felt. But it also points to the fact that all 3 of these programs now that were delayed during the pandemic have come back to the full strength that they were at before the pandemic. And those are the things, along with other programs that are coming out of the pipeline, that are helping to continue to drive this revenue curve up and to the right as we move into fiscal 2023 and beyond. So let's talk a little bit about the technology that underlies everything that we do. The first area is in the area of micro-precision optics. So we make some of the smallest optical components in the entire world. This camera module that is shown here could be built into an endoscope. We make some endoscopes that are small enough to go through the blood vessels in the body into the heart, so that the surgeon can be watching the inside wall of the beating heart while they're doing surgery. The endoscope that's shown here, or the camera assembly that's shown here, is about 1 millimeter in diameter. We actually make some lenses that are as small as 50 microns, or 0.05 millimeters, which means that they are 1/20th the size of this camera that we're showing here. So that 50 micron element is just about the size of a human hair. The benefit of these very small optics and very small optical systems is that you can go places in the body that you couldn't go otherwise. And you can think of places like the brain or the eye or sinuses or cardiac, as I just described, or urology or spine. Many of these places are places where minimally invasive surgery is still developing, because the need for smaller optics and smaller optical systems has really been limiting the extent to which minimally invasive surgery could grow in those areas. And with the small size optics that we can design and build, we're opening up new avenues in many of those medical device areas. 3D endoscopes is the second area that we have focused on. Regular endoscopes, so-called 2D endoscopes, if you like, which are the more traditional endoscopes, have really become a commodity market. 3D endoscopes, on the other hand, are orders of magnitude more difficult to design and manufacture than a traditional 2D endoscope. And there's lots of technical reasons why that is, but at the end of the day, it has to do with the requirement to build an endoscope that has very, very, very tight tolerances, so that the surgeon who's using the 3D endoscope will get a good 3D perception without getting nausea that can come if you don't have a good image. So we're one of a few companies in the world that have been able to design and build 3D endoscopes. We've been doing this for over 20 years. We actually designed and built the very first 3D endoscope that was used by Intuitive Surgical. And many of the 3D endoscopes that we design and build now are going into the robotic surgery systems. And robotic surgery is an area that's growing very, very quickly. And many of those systems need 3D endoscopes. And so we're piggybacking on that growth with significant growth in our 3D endoscope business. The third category of our technical technology that's really unique is our overall ability to design and build digital imaging systems and digital imaging electronics. And by this, what I mean is traditionally an endoscope would take an image and it would carry that image outside of the body, and then you'd have a fairly large camera that would sit outside of the body. The sizes of so-called CMOS sensors, which are the imaging sensors that go into many consumer products like cell phones and laptop computers, those CMOS sensors now have gotten small enough that we can start to move those CMOS sensors into the body and into the distal end of the endoscope. Once you do this, you have to have a capability to handle all of the information that is now transmitted through the electronics. So the image now gets converted into an electronic image, and you need to have a capability to be able to handle those electronic images, to be able to transmit them over cables, and to be able to process them after they are captured from the body so that they can be displayed in a useful way on the display. And so we have a unique capability inside of our company that combines the capability to design and build the optical elements, which allow for the illumination of the inside of the body, which is normally dark, and form images of structures and such that are inside the body. But then also in the same company, we have the ability to take the images after they're converted from the optical image into an electronic image and carry that image all the way back to the display system so that the surgeon can see the image on the screen. The ability to design and build the entire system from the beginning to the end, from the optics to the electronics, is very unique. And it was augmented by our acquisition with Lighthouse Imaging, which I'll talk about in a minute. And it really makes us unique in our capability to design and build these entire systems that rely so heavily on digital imaging.
And then finally, we have a number of traditional applications, a number of products that we've been building for many, many years. The main point that I want to make here is that we have a couple of programs that where we supply some companies that everybody would recognize. One of those customers, we've been supplying the same product for over 10 years. The other company, we've been supplying the same product for over 20 years. So these products provide a great base for the company, and they're really indicative of part of the business model, which demonstrates or says that we're going to rely on the fact that once a product goes into production, it tends to stay in production for a long time, because medical device companies are very risk averse. Once they find something that works, they like to continue with it. And then by adding more products from our engineering pipeline year after year on top of those products that are already in production, we're able to build our revenue in a very robust way. I want to talk for just a couple minutes about the two acquisitions that we've done so far. The first acquisition was Ross Optical Industries, and we acquired Ross Optical about a little over 3 years ago. As a small company, I like to say there are three things that we really want to look at when we're looking at potential acquisitions. The first is that it has to make sense from a financial standpoint. It has to be accretive. The second is that it has to make sense from a business standpoint. There has to be some way that the two companies acting together will be more than the sum of the parts. And then the third point is that as a small company, we really care a lot about corporate culture. If you have the best combination on paper, but the people can't get along, it will never work. And Ross Optical has been, without a doubt, extremely successful in all three of these areas. So in 3 years, the company has basically paid for itself. Number one. Number two, Ross Optical expanded our capability by providing us a very robust capability to source and to manufacture small individual lenses and small subassemblies. They provided access to a worldwide sourcing network that they've been developing for many decades. And they provided us access to a number of customers in the defense and aerospace industry, which is one of the adjacent verticals that we're starting to move more and more into, in addition to medical devices. And then from a cultural standpoint, the company aligned very well with POC. We have similar attitudes towards how we deal with customers, similar attitudes about how we do business, and similar attitudes about how we deal with our employees, who, after all, as a technical company, are really critical to the success of the company. So Ross Optical was very successful. The acquisition of Ross Optical was successful enough that just a couple years later, we did our second acquisition. This was an acquisition of a company called Lighthouse Imaging. And we finished this acquisition We finalized the acquisition legally on paper on October 4th. We're continuing with the integration of Lighthouse Imaging into POC. But Lighthouse Imaging is, before the acquisition, is what I like to call a friendly competitor. So sometimes we would partner with each other. Most of the time we were competing with each other. Both of the companies were working on medical device systems. But over the years, Precision Optics had developed a particular expertise on the design and manufacture of the optics that go into these imaging systems. Lighthouse Imaging had developed a particular expertise on the electronic side of these systems, some of the things that I talked about in an earlier slide on CMOS sensors. And so while both companies could design and build the entire system, both of us had to rely to some extent on outside resources. By putting the two companies together, we're now able to take the product and we're able to design the products and build the products from the beginning to the end. The market is already responding very well to this. We announced just a few weeks, maybe a month or so ago, a new development program that we were awarded by a very big urology company that works in the urology space and medical devices. And the VP of operations of that company told me that he was familiar with Lighthouse Imaging. He was familiar with Precision Optics Corporation. Neither of those companies by themselves would have gotten this new order from his company. But he said, now that we put the two companies together, they see the benefits of the two companies together and our ability to provide to them an entire solution. And so because of that, we were able to capture this new project. We believe, and we're starting to see signs of this, that there are many other opportunities like that out there. And so this acquisition, again, has been quite successful. This really sort of restates, this slide restates what I just described. We now can take a product from a technology standpoint, all the way from the optics, the image sensor illumination, all the way through the packaging, and we can importantly design and then build the entire system. This has great benefit to our customer who wants to go to one place and give the whole project to one company. We also are vertically integrated from a business capability standpoint. So in addition to the breadth of technical capabilities, we also have in-house our own machine shop, for instance, so that we can quickly fabricate components that we need to test a new prototype, so we can move the project through the multiple rounds of prototypes very quickly. We have our own regulatory group, so we can help our customers with the regulatory requirements that they have to satisfy for the FDA if it's a medical device, or for the State Department if it's a defense program. So not only are we integrated from a technology standpoint, we're also integrated from a business standpoint. All of that integration, all of that combined capability in one company is very attractive to our customers and really differentiates us from many of our competitors. The engineering pipeline is something I've talked about a number of times now. It's not appropriate, or we don't have the time here for me to go through every one of these programs, but I'll just comment on a couple of sort of categories here. So we have these projects up the top, which have been in production for many, many years. We have these 3 or 4, 5 programs here that have gone into production over the last year or two and have driven some of our growth. You see these programs here that are moving forward and that we expect to go into production in the next 12 to 18 months. And then we have a number of programs here which are still in the feasibility and early prototype stage, which will probably take some 24 months perhaps to get into production. And then we have a whole bunch of programs that we're working with customers on to look at proof of concept and whether our technology fits with their application needs. So programs don't go onto this chart with an arrow here until we've already been engaged in a way that we believe these programs will go all the way through to production. Now, there's no guarantee that every project that goes through the prototype stage will get to production, but our success rate is pretty high. And so we expect that most of these ultimately will reach production. And of course, as I've talked about a couple of times already, these programs rolling out into production with these other programs continuing in production is really what allows us to drive our revenue at the rate that we're seeing. We've had a number of programs that have gone into production. This really restates the things that I already said. Programs commercializing, going into production with new programs coming behind it is really what the revenue growth is all about. There are lots and lots of places in the body that we can apply our technologies. There's great growth in the medical device, minimally invasive surgery space, and that's really the space that we work in. All of the technologies that we have developed, the micro-optics, the 3D, and the digital imaging, really are targeted towards minimally invasive surgery, which is growing very fast. There are a number of aspects of our go-forward strategy. So we'll continue to drive growth and efficiency in the programs that we already have developed. We've talked in our recent earnings calls about working to improve efficiencies and to drive our margins up, and we're starting to see the effects of some of that. We're continuing to advance pipeline projects to commercialization. I already mentioned this a number of times. We have 4 or 5 programs that we expect will go into production in the next 12 months, which again will continue to drive the top line. We have been investing in our engineering capabilities in order to be sure that we continue to maintain our competitive advantage from a technology standpoint. I said right in the beginning, we're a technology company, and so we have to continue to innovate. We have to continue to push the envelope on what's possible from a technology standpoint, and we're continuing to do that. We have invested in our sales and marketing as well as engineering, as I commented on before. We'll continue to recognize the operational benefits of the acquisitions that we did. We have been working on integration. Integration sort of rolls right into efficiency, which I commented on right here at the top. And so these two things together will continue to drive efficiencies in the company, continue to drive margins up, reduce operating expenses, and drive the revenue from the top line really to the bottom line. And then finally, I've already commented a couple of times on how successful our first 2 acquisitions have been. We don't have any absolute requirement in doing more acquisitions at any particular rate, but we do believe that there are other opportunities out there, and we're continuing to explore those. Let me comment just very quickly on a couple of the highlights of our recent financial results. So from a revenue standpoint, I already showed the slide showing the growth over the last 4 or 5 years. Quarter over quarter, our first quarter of fiscal year 2023, and I'll point out that our fiscal year ends in June. So the first quarter of fiscal year 2023 ended September 30th. And you can see there was substantial growth year over year for the first quarter. Some of that growth, of course, came from the acquisition of Lighthouse, but even factoring out the increase in revenue due to Lighthouse, we had something like a 60% year over year organic growth rate, which again comes from those programs that over the last 12 months have moved from development into production. I talked in a couple slides ago about our efforts to improve efficiencies, and so we're starting to see that in a pretty significant way year over year. The margins have improved quite substantially, and as we've said in our earnings calls, we expect that to continue to grow. Our targets are 40% and higher, and we're starting to see the margins move in that direction, and I'm quite confident we'll be able to grow the margins to a point above 40%, which has been our target for some time. Some of this, of course, comes from the economies of scale. Some of it comes from a number of products being more mature. They've been in production for a longer period of time, but some of it also comes from the added emphasis that we have placed, now that we're a larger company, on driving efficiencies into all of the things that we do, particularly on the production side of things. All of this leads to better performance in the bottom line, and we have talked publicly in our last couple earnings calls that fiscal year 2023 will be a year in which one of our major goals is to demonstrate that we can drive efficiencies and we can drive the growth in the top line to positive and growing EBITDA on the bottom line. And so again, you can see in the first quarter of fiscal year 2023, year over year, we went from an operating condition where we were running at a loss to an operating condition where we're running at a positive adjusted EBITDA. This slide, of course, shows all of the gory details of our income statement, and the critical points are the ones that I think I made in the last couple of slides. I'd be happy to talk to anyone about all of the details on our income statement or the details on our balance sheet with the one-on-one conversation. So with that, I will finish up. I will thank all of you for tuning in today to hear about Precision Optics Corporation, and I would love to talk with anyone who would like to talk further in the one-on-one sessions this week or really at any time. And I'd be happy to have you set up a time talk one-on-one with Robert. With that, I will thank everyone and turn this back over to Robert.
Fantastic, Joe. Thank you very much for your time today. It's always greatly appreciated. As Joe just said, if you have not already signed up for a one-on-one, whether it be today or really at any point here in the future and would like to do so, send me an email, Blum, B-L-U-M @lythampartners.com. You can visit our website, lythampartners.com/virtual. Click on the one-on-one meeting request button. We can get you taken care of that way as well. So we hope you all enjoy the conference today. Joe, thanks as always for your time. Greatly appreciate it.
Thanks, Robert.